Hello guys, welcome to my channel. What is GameStop and why is it trending? It's all over the news. So today we'll divulge GameStop and explain to you why it's trending in a simple, plain language. I will approach it from a very beginner perspective so that you actually understand what's happening, the nitty-gritty of all the details. I would really appreciate if you support this content by liking this video and subscribing to my channel down below. Thank you so much. Are you ready? Let's get started. GameStop is an American high street shop that sells games, consoles, and other electronics. It is headquartered in Texas and is the world's largest video game retailer, operating in more than 5,000 stores throughout the United States, Canada, New Zealand, Australia, and Europe. GameStop is the retail store that you just walk in to buy your favorite game. It used to be very popular in the early 2000s, but due to the advancement in technology, most games are played online and downloaded online, so it's not as popular as it used to be before. So why is it trending? Why is its share price skyrocketing? And importantly, what does it have to do with Reddit? Reddit is a social media platform that people belong to different groups called subreddit and discuss issues that are important to them. So there's people that discuss about holiday, there are subreddits on finance, subreddit on business, subreddit on cars, house, borrowing, growing, marriage, and several other topics you can find that people discuss on public forum. So Reddit is one of them, and there's a particular subreddit which is the Wall Street Bet. This subreddit, Wall Street Bet, has interest in shares and stocks. They are interested in buying shares and selling shares and issues related to that. As of now, Wall Street Bet has more than 7 million followers. So how is a public forum related to shares and stocks of GameStop? Elon Musk. Before we dig deeper into what actually happened, let me explain trading to you. Trading is just a simple language which involves buying and selling of shares and stocks on the stock exchange. On the stock exchange, you can buy shares, you can sell shares. There are two types of trading. We have the long market position and the short market position. What is the long market position? This is when you buy a share and you hope the price will rise in future, then you sell it. The difference between what you sell it and the price that you bought it is your profit and it belongs to you. Let's make an example that this mouse, you bought it on the share market as a share for $20 and you sell it in 5 years time for $100. So the $80 difference is your profit, it belongs to you. That's what we call a long position. On the reverse, a short position is when you buy a share and hope the price will decrease, so that when the price decreases, you make a profit. So people are like, how can you make a profit when the price decreases? Remember the previous example that I gave with a mouse that you can buy $20 on the stock market, assuming it's a share. Of course, it's not a share. This mouse, the price is $20. Instead of buying it, because I'm hoping that the price will fall, I will borrow it from an exchange. The exchange will agree to give it to me on an interest, since I am borrowing it from them for a period of, let's say, 6 months or 1 year. Now, as soon as I borrow this mouse from the exchange, I will go and sell it at the prevailing market price of $20. So when it's 6 months time that I am supposed to return this mouse to the original owner, which is the exchange, and the price, hopefully the price has fallen to $5, then I will go and buy it back from the person that I sold it to, or from the market, for $5 to return back to the original owner. So the difference between the $20 that I sold it and the $5 that I'm buying it back, which is $15 profit, is what I have to keep. So that is an example of short selling. Short selling is when you buy something at a price and you hope that price will decrease. The difference between what you are selling it and the price you will buy it back is your own profit. So that is what happened in the case of GameStop. Instead of me buying mouse, it's been replaced GameStop shares. If you follow the performance of GameStop over 1 year, you will see that the share price has been over $4, $3, $4, $2, $5 for a good number of time now. Since the beginning of this year, the price started rising significantly, even reached a maximum of about $350. So imagine something that has been historically over $4 now is trading at $350. So what actually happened in boosting up the price? So this is where the subreddit Wall Street Bet come in place. Big hedge fund like Mervin Capital and Citron Research had a bet that the GameStop price will keep falling. So because they believe that the price will keep falling, since it's a retail store that have not gone online, they decided to borrow a massive amount of GameStop shares to trade on the market, so that when the price falls, as in the example I explained to you, they will make profit from the decline in price. This is a classic example of short selling. This phenomenon is called shorting. A subreddit Wall Street Bet are aware that the GameStop shares are highly shorted. In fact, it's one of the highest shares on the stock market. Since it's a forum that discusses about shares and stock, they decided to punish the hedge fund gurus. How did they do this? So they spoke within themselves that they will buy the share of GameStop. They will buy the share in bulk. Because a lot of people are buying the shares at once, the share price will keep rising. So that when it's time now for the hedge fund to buy back the share, to give back to the original owner, the share price would have increased so much that big hedge fund will run at a loss. And that's what they did. So they started buying the GameStop shares. As more and more people are buying it, the volume of shares is limited and more people are buying it, so the price will keep rising. This big hedge fund, Mervin Capital and Citron Research, got scared and decided to go and buy back the share at a loss. The Wall Street Bet guys said no, we're not selling, thereby making the price to rise more and more and more. The process whereby there's more and more demand for these shares and people are buying it in order to reduce their loss is called short squeezing. They are squeezing this hedge fund out, thereby making the price to rise. This hedge fund borrowed the share from the exchange at a price of about $5 and sold it to Wall Street Bet guys at the same price of about $5. But now they have to buy it back from Wall Street guys at a price of about $350. So you can imagine the loss that they have made with just one share. So which means with just one share, they are already losing about $345. So imagine what will happen for a large number of shares, let's say like 1 million shares. Their loss has become infinite, enormous. And the problem with it is there's no limit to the point that the share price can rise. So which means as the share price of GameStop keeps rising, these big hedge fund guys will keep losing money. So what made the share price of GameStop to rise? First is the subreddit guys that want to punish big hedge fund because of their involvement in the 2008 financial recession. Secondly, Elon Musk tweeted GameStop. By Elon Musk recognizing the work of this subreddit Wall Street Bets, he gave them popularity and made them more stiff with their opinion in increasing the share price. Also, another reason why the stock price rose is because Ryan Cohen, the founder and former CEO of Chewy and manager of RC Ventures, bought a lot of shares from GameStop and it was added to their board. And he planned to make the GameStop digital. By going digital, it means their finance will change. Hopefully, they will become a profitable company once more. So the question is, will this price keep increasing? Now, another question is, what role do Robinhood play in all of this? Robinhood is an exchange. It's an online trading platform that's being used by most millennials in the United States. Most of these guys on Wall Street Bet use Robinhood to buy and sell their shares, their GameStop shares. So when Robinhood discovered how they are planning to beat hedge fund guys to their game, and Robinhood has some partnership with this big hedge fund, they decided to stop the market. Although they gave their own reason for stopping the market, which is the clearinghouse, but the Wall Street guys believe that they are lying, that they stopped the market in order to protect the big hedge fund companies. As more people are buying the shares, the share price will keep rising in this case, thereby increasing the loss of the big hedge fund. And now Robinhood has been sued for their involvement in market manipulation. Not just Robinhood, other big exchange firms like eToro, Schwab, IG Investing, Webull, and several other big platforms limited the GameStop trading in order to limit the loss of the big hedge fund guys. Now, you might also have heard of AMC, Nokia, and others being restricted because these big hedge funds do not only short on GameStop shares, they are equally short on other declining shares like Nokia, AMC, and several others. And these Wall Street guys are still aware and they want to keep beating them to their game. Hope I was able to give you a concise, easy explanation and summary of the whole trending news of GameStop and Reddit. I would really appreciate if you support this content by liking this video and subscribing to my channel down below. Thank you so much.
Talk to me.